Hello everyone, hope you are doing well. Making a trade recap since yesterday. Yesterday I made a trade recap as well, slash session recap. I went through all the three break-evens I took. Quite painful, need to be honest, especially the last one. It just tagged me out for break-even for like a pip or something and just shoot to the upside. But yeah, we do every single day is just follow the plan, okay? And how can I have confidence in my trading plan? I need to go back, okay, to my data, to my live trades, and I can look to the stats and I can see, okay, this works. Just need to stick and repeat every single day. The least amount of hesitation you can have on your trading, in my opinion, the more clear, the more easy and the more enjoyable trading is, because you can have a lot of hesitation, especially in this strategy. So you need to make sure you build your own rules around and to make at least as much stressful, as much less discretionary, right, as possible. Of course, we always have some kind of discretionary because it's just experience in the market, but at the same time you need to earn that discretion, okay? You can't just come into the markets in 1 year and you can say, oh, 1 year is too much. No, it isn't. And you can just you don't like, you can have a little bit of experience, okay, but you need to earn that experience, okay? It's just nothing that comes easy. It comes with time. But I'll just make a trade recap here instead of talking too much. So I won't go to so much detail in terms of item frame structure and all the item frame analysis, because just watch the last video. It was literally yesterday. So because it was yesterday, a lot of things didn't change. But yeah, so in the daily time frame, we swept this high, didn't close above, so it can be a sweep. However, this internal leg, okay, is low, still holding, so it makes sense looking for buys. When price taps into this daily demand, even though it's a very large demand, it already tapped in the distal, so I can expect a pullback. And a lot of the times when we have a very large zone and price is going to the downside, it taps the distal of the zone, it gives you a strong reaction, but then it don't follow through. Once we liquidate this low and create and absorb all the orders, usually around EQ or even lower, then is when the move happens. This happens a lot with large zones from my testing, that yes, you can provide a pullback. I'm happy to play the pullback in case price follows through, but of course understanding that still have hyperliquidity zones below, and we have a lot of orders that still didn't get absorbed in this mitigation. So going to the H4. Okay, so this is basically the daily mitigation, okay? There's nothing on H4, is on H1, but very low probability, so that's why I'm just expecting a reaction. So at this stage, when I woke up, what I notice is, first and foremost, we still have this unmitigated hyperliquidity POIs below, and on H4, okay, we're still inside this protected internal leg. This still internally protected, okay? This is why I put this supply range, which means that price can go all the way up, okay, all the way up, and I still, because I don't assume the structure will change until it does, it can go up, 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 and I still be looking for sales down here. However, of course, I understand the daily mitigation, and I also understand that if this mitigation, okay, is going to hold, of course, this needs to get run. And how this will get run if this gets run if this internal structure, okay, remains bullish all the way up until this high goes. So I was flexible enough to understand that, okay, I can look for sells, but I also need to be aware that this daily mitigation can be enough and can fall higher prices. So this can be a place where you can look for longs. So on H4, we also understand that price mitigate this supply. It's a very high probability supply, right? In the premium prices, we have inducement above, so very nice supply that price is mitigating. So I'm interested at this stage in looking for sales. We of course still in premium prices. If you use the entire range, the entire leg, okay, so it makes sense looking for sales. Going to M15, I'll not explain this because all this internal structure was explained yesterday on the trade recap. So just to make a little bit easier for and to make a small recap, I'll just skip this because it was explained on the last trade recap yesterday. I took a trade here and got taken out as a break even, and this week price went to the upside, create a new protected M15 low. Okay, so we are in this internally because overall we are still inside this high and this low. Okay, so we can see that price or something like that. Okay, sure, and push down. Okay, and here price is putting the pullback. Okay, of this leg, of this bearish leg. Okay, this big bearish leg. Price mitigate the H4 supply at this stage, and it's valid to look for sells. But when I woke up, the price was around this area, and for me it was not very clean what price is going to do next, because this demand is not a very high probability in my opinion for longs. We also mitigate opposite high time frame protected supply. So when you have something like that, imagine this is the H4, okay, and price taps the H4 supply that's protected. Okay, this is the move down. Okay, when price taps here and moves down, looking for longs now, it's much low probability because the objective of the pullback, okay, is completed and price can just keep going to the downside. This is why I use premium versus discount, and when price is around, for example, you can put the premium versus discount. When price reach this, it becomes a little bit less probable to keep buying. Okay, so this was why I was not sure if I was going to take any buys from here, even though we have this buy side liquidity and we have these high probability supplies. Just because we reach this area and this POI is not very high probability, and if you notice and you go a step further internally, what is holding? We have this push down, push up, and push down. Okay, so you have all this supply range holding. Okay, so again, I don't want to just force and buy into this supply range. So yeah, I just stay away and wait for more volume. As you know, DAX around 8 AM shoot in one of the directions, up or down. Is a lot of volatility, so it's not clean. I wait for 8 AM. So let's continue. To be honest, I saw this trade, and it's something that you need to accept, that you won't, it's not just accept, you should not take every valid trade that you see. You really shouldn't, because especially when you understand all these concepts, you can, like, you want to take a trade from here to here and then to here, and it's just a mess, right? You'll take so much losses and your psychology won't be very protected when the high probability setups present. So stay away, stay clear of these low probability trades. But in this situation, I could see that, okay, if this mitigation is going to hold, we already know that this internal structure should remain bullish. And what you have here, you have the price mitigate the demand, shock bullish, pullback. You could enter here on M1 targeting, but what can we target here? We can only target this high, okay? Because when you look left, this probability is not high probability. Sorry, this demand is not high probability. We mitigate this, so the only confirmation is that this high is weak. So yes, if you can take here a trade, a scalping trade, do it. But I stay away from this. Don't want to risk my capital, not just my financial capital, also my psychology and mental capital. Okay, there are two different types of capitals that you need to preserve. So yeah, 8 AM is not still 8 AM. Can see, right, a lot of volatility. I just okay, can be something like that. So what happened here? Like I said, we mitigate the H4 supply. Okay, this is the H4 supply. We were inside this protected M15 low, but if you look a step further, what did you form? We formed this liquidity. How these lows were formed, very corrective, right? And we are still inside this supply range. we also swap liquidity here. Okay, we swept this liquidity and price failed to close above, which means we didn't have an internal boss bullish, and internally again you can see that price went down. So this demand price, sorry, this supply price failed to close above, so we didn't have alignment to confirm the high as weak, because if we have a close above, we have now alignment, okay, between this leg, that this high is going to get run. So we didn't have that. Internally we go up, down, up. So this supply, in terms of supply and demand ranges, we gave us we go from demand range, right? So let's just something like that to supply range. Okay, so we have a sweep, and you always should trade away from the sweep, like you know. And by swap liquidity, shift order flow, okay, back bearish, form this equals this trend line liquidity. This POI is very low probability, price mitigated for supply, we have much high probability zones below. So I was interested in looking for sells here, okay. If I drop down to the M1, let me just use the correct zone. I used nothing because it was a clean buy to sell. So okay. So what's happening? Okay, so price reach here, waiting for my entry model to present itself. And again, you need to have a mechanical, in my opinion, as much mechanical as possible entry model. You need to know when you take extreme, when you take decisional, if you take both, how you take both, okay? This is where I think traders can sabotage themselves. So you need to be very on the ball, and you need to know what you are doing at this stage, okay? Because I already give item frame analysis, I did everything, now it's execution time. You need to be focused. So let's continue. Okay, so this is when I personally don't get, sorry, let me just, okay, this is when I personally don't get involved here, because I wait for a clean liquidation, and according to my trading plan, I didn't have that yet. At the same time, I don't want to share this now, but in a minute I'll go to this provider. But okay, price went to the downside. We have the change of character. You probably already took the flip, because price went down, went up. This is a flip, okay. It's a little bit fractal, but you can see price push up, sorry, push down, push up, and push down again, mitigate, and you can go even to the 30 seconds to be easy, okay. You can see price pop up, mitigate, and goes on. So maybe you took this trade because you can see price reach then 15 POI or medium time frame POI, and you have the short and flip, okay, and you get taken out. No clean liquidation for me. I stay away, and if price went to the downside like me, I couldn't care less, okay. It's not part of my trading plan. Just accept and be fine that you will miss trades, and don't try to fit your trading plan on all these recent missed trades and no tags, and that will just decrease your clarity massively, and you're trying to fit everything and no rules around, and then you start hesitation. Like, have a clear fixed rules, and if you miss, you miss, okay. It's not, you don't need to have a trade every day. You don't need to trade every single day, or that I can say in English, in my opinion, it's a lie that you have a trade every single day. Like, you don't, if you have a clear rules. But yeah, let's do this. And at this stage, it is very interesting because this provider, I'm always clicking through different providers, okay. Because in this I have a lot of wicks, and even I use IC Market, and they have a different data, right, than this Pepperstone, and different from Owanda. So it's a mix between both. So I'm always with my IC Market open because I need to execute the trades, right, and I'm also open with Owanda and Pepperstone. So I'm always trying to see which one is near or close to sorry, my English is very bad. I'm always trying to see which one is close to the IC markets, and at this stage, if you use IC markets, you can clearly see that price went to the upside, and I'll make a screenshot of the entry, and you can see by yourself that on IC market we the high and straight push to the downside. So at this stage, the shock is down here, or here if you want a little bit more aggressive, because this is an inside bar. But after seeing IC markets, the price swept the high and pushed down, I stick to this one and I wait for my entry mode. Okay, so we have the change of character down here. Let's go slow in this one because you can be new and get confused. So this is the change of character, right? Price went to the upside, so is reacting to the demand and push down. So at this stage, I have the shock and I have the flip. And as you can see, shock and flip happen at different stages. First was the shock, and then was the flip. So what should I do now? Is this flip swept liquidity for you? And this can be a little bit subjective. For me, yes, because I can confirm on the seconds time frames. You can use in the 15 days, so 13 seconds, and you can clearly see that the price swept liquidity went up, down, so it's swept liquidity. Okay, so I mark this POI at this point, and on M1, right? If you are not sure about if it's swept or not, you really need to have rules around this and see how you prefer. You can use the seconds to confirm or not. You can see by weeks, right? That let me just replay. You can see that, okay, this week price went down, went up, right? So it's swept liquidity. Okay, so it's up to you how you want to define. I use this to confirm. Okay, so at this stage, what you can do? So you have a flip form through sweep of liquidity. You can take the flip. Okay, so you can just enter. Sorry, you can enter here, either a stop loss, cover the high if you want, or you can wait for 5S shock. So yeah, so at this stage, yeah, I just can put a stop order and a little, yeah, like something like that. Because on Pepperstone, the shock just happened below. On here, it didn't happen here, but it's the same thing. Imagine that it happened. Imagine it happened. The shock already happened, okay, and we have something like that. It's the same thing. It went up, went down, went. A failed reaction already happened. I use weak breaks, right? Went to the 15S. And you just confirm on the 5S is the same. Okay. Can you just stop order or enter that market? I think this is more than enough. And again, let's target 10R. Okay. And this is where emotions can come. Okay, so what happened? Price went to the downside very quick. Around this area, this time we have a lot of volatility. Okay, so price went to the downside, and at this stage I was running around 5%. And I remember the last 3 trades that I took yesterday that went to 5%, and then went to break even. And when price was around here, I thought, like, what can I do? Should I close or not? But I just look to my data and reinforce the idea that 10R is more advantage according to the way I trade. So based on my data fees based on my data, I just keep with a 10R. Okay, so 10R and stick to the plan. And then is the 10R. Okay, so that was the trade today. Quite simple, and don't want this to be too long, but yeah, it makes sense in my opinion. I was looking if I should use this as an inflection point where I should target 8.79, but at the same time I would be messing up with my edge, and if it's not around 9, something like very close, I won't adjust, and I just accept the probabilities. So yeah, 10R, very quick, and that's it. And price continue down, and yeah, my second target is this one. I'm not. I'm more inclined for this demand, because leaving 20% just for the sake of 80% is not. How can I say? Is not something that I'm interested in. So we need to have a few more percentage to have TP2. So my TP2 is down here in this demand for 26. But yeah, this was my trade, and hope you can take a few lessons. See you guys soon.